All right, they're service sector jobs, but they were a lot stronger than we thought they would be, and that might telegraph the big employment report on Friday that's due out. 298,000 of them created in the latest month versus the 190,000 that was estimated. Separately, we're learning that Samsung plans a U.S. expansion that would shift a lot of manufacturing from Mexico to the United States. Again, this is coming from our friends at the Wall Street Journal. To market experts, Saut, D.R. Barton, and Nicole Petallides on what maybe the folks down on the New York Stock Exchange are saying this could mean for rate hikes. I think, Nicole, that this would be deemed greasing the skids for those rate hikes. What are you hearing?
Absolutely, right on point. We spoke with John Corpina of Meridian Equity Partners, and he said exactly that. And as you see, what we saw today, the blowout numbers for the ADP, that's the private sector, we'll get a good jobs number on Friday because that could be the indication for that. That, in turn, would give the Fed all that they need to do this rate hike that everybody expects anyway. And then you continue to see these financials getting the pop because it's all about the financials. Coupled with Trump, they've just been tearing it up over 30% since Trump was elected.
Jeff, let's say those rate hikes are given, but let's say in 2 weeks they don't happen. Then what? What do the markets do?
I think the markets are just going to tread water in here for a few more sessions. I would point out that the transportation average is down from its intraday all-time peak about 3.5%, and the Dow's only down about 1.3%. The trannies could be pointing the way into the rate hike next week. I do think you are going to get a rate hike because the underlying economy is stronger than a lot of the figures suggest.
All right. D.R. Barton, we should explain here, and Jeff knows this like nobody's business, that normally as the transports go, of course, that heralds where the Dow ultimately could go or confirm the direction that we know. That Dow theory generally holds true. But I'll ask you the same question. Let's say the rate hike doesn't happen, and in 2 weeks the Fed meets and we don't see that happen. Then what do the markets do? Are they disappointed they didn't see it? Do they read alarm into the fact the Fed didn't hike? What?
Well, Neil, you could do this by yourself because I think you hit both of the points right there. I think if we don't get the rate hike, then that signals something very negative to the markets. Dr. Yellen and the whole Fed has been very hawkish in all of their comments over the past couple of weeks, saying if we'd have to see something very different to not raise rates. The Fed funds futures rate, where traders are hedging their portfolios versus a rate hike, are showing an 86% chance of a rate hike. So I think it would be a very big negative, especially on the tail of this big private jobs number that we got this morning.
Yeah,
your friend, Neil, Ted Weisberg from Seaport Securities, gives a little bit of a contrarian view to that, actually saying that rate hike, no rate hike, it's not as important. It's all sort of baked in, that rather than monetary stimulus, looking for fiscal stimulus from the president and his administration going forward, and that the markets may not, the stocks may not be as focused on the rate hike as you think. I have to say most of the traders here are pretty optimistic for the long term because they believe that Trump's policies will go into effect over time and that will bring things along.
What if that over time is over a long time, Jeff, that in other words it doesn't materialize, that is the tax cuts, that they're still going to happen, but they might not happen so quickly. In fact, they might not happen at all this year. Then what?
I think Nicole makes a good point, and I would point out to you that the Obamacare has a number of taxes involved with it, and that's why repealing and replacing that is first order for the administration.
The taxes on that, Jeff, I didn't mean to jump on you, my friend, but the taxes on that, at least in this latest plan, do not take effect or taken away this year. They're a next year development. Does that concern you?
Yeah. No, that does not concern me. But there is a battle royale going on in Washington, D.C. I talked to people I know on the Hill yesterday, and yesterday was not a good day for the new healthcare folks.
No, you're
so
right.
That's first and foremost, and then we'll see whether the rest of the Trump agenda gets put in place.
You know, D.R., we see these kind of stories every few weeks, and I guess given the nature and the length of the bull market, 8 years old this week, that it's getting long in the tooth, and that we're due for, at the very least, a correction. Of course, we've always been due for that, right? Do you worry about just that aspect of it? You know, that hey, it has been a while.
Yeah, you know, I do a lot of technical analysis in my work, Neil, and we have been long in the tooth, but I tell you what I do see that's more important. When we get up to these levels like we are now, with strong breadth, with participation from lots of different sectors, not just a few big stocks or one or two sectors pulling us, the markets do not correct easily from that position. So I'm looking, are we overdue for a pullback after the really strong 3 or 4 weeks we've had? Sure, but I don't see a 10% correction in the offing. I see a 3, 4, maybe 5%er, and then coming back to test these highs again.
Nicole, a lot of that goes back to what you were saying at the outset from Ted Weisberg and others. You know, it's going to be really fiscal stimulus that will decide this market's fate potentially than just monetary stimulus. What do you make of that?
You know, I remember listening to Ben Bernanke. Remember Ben Bernanke used to give his speeches and he would talk about monetary policy. And in the end,
I never understood a word he said.
No,
I really never.
Nerd here. Yeah, I know you understood every word. I would listen, and he actually would say it all the time. He would throw in that Washington or fiscal policy wasn't on point. And now you have the idea here that it will be. I will say there is a little bit of tone here. Scott Redler of T3 Trading actually saying, look, we're being a little more tactical with the trading. We're hearing people now shorting a little bit and being long at the same time. Don't forget, this is the 101st day that neither the S&P nor the Dow has fallen more than 1%. Big deal? Not a big deal? Well, guess what? You haven't seen that in 20 years. So, you know, for everybody who says a little bit of a pullback or back and fill is due, maybe it's due.
All right, guys, thank you all very, very much.